Anticipation. What are we anticipating this week? There's some economic news coming out that is going to affect markets more than likely, one way or the other. And honestly, I'm kind of wondering what's going on with the Phoenix real estate market. Are we going up or are we going down? And I'm going to talk more about that. So, welcome, you guys. Thanks for coming to my channel. I'm Caitlin McKeag. I do these Monday market updates every Monday, and I'm a real estate broker here in Phoenix. So, let's talk about what's going on this week. Federal Reserve to resume rate hikes after June pause. After taking a breather in June, the Federal Reserve is all but assured to raise interest rates by another 25 basis points this week, with Fed Chair Jay Powell expected to leave the door open to additional rate hikes later this year. So what's big about this week or this meeting is not as much about where they're going to hike the rate, because we know more than likely it's going to be 25% or 0.25%. It's more so about their feeling on the economy and inflation and whether or not they see future rate hikes for the remainder of this year. So that's going to be the big news this week when the committee meets, is more going to be about their commentary, how they feel about things, and where they expect to go. And that's what will likely affect markets. So the reaction to that is going to help us understand where mortgage rates are going to go. Again, if you're new here or you're not familiar, the federal funds rate is not the mortgage interest rate. This interest rate is for short-term lending, but the changes that take place with the federal funds rate affect markets, and that affects mortgage interest rates. So this is going to be important to watch. We also have some other economic news coming out this week, which is going to be the second quarter GDP numbers. So that could affect markets. And then we also have the PCE, which is the personal consumption expenditures. That price index is coming out. So depending on how that comes out, it could affect mortgage rates as well. So that's why we pay attention to all of this, because the economy always trickles into the real estate market. Speaking of mortgage rates, here's the latest. Mortgage rates sideways to slightly lower. So this article came out on Friday. After rising somewhat sharply yesterday, meaning last Thursday, rates managed to find their footing on Friday's market session. Basically, not a lot of movement in rates, nothing too exciting, but they are expecting some volatility this week, whether it be good or bad. So for you, if you're out there house hunting, if you're under contract, if you're thinking about buying, if you've been in touch with a lender, make sure you're checking in with them, because we could see some changes in rates this week. So that's kind of it with the economy right now. There's not a whole lot for me to talk through today that's really affecting the real estate market. So let's talk real estate. And let's talk about Phoenix specifically. I was saying I'm not really sure where we're headed right now, because we're seeing a few different things. We're seeing cooling, we're seeing some inventory rise, but sometimes that's common in the summer. So let's talk more about it. I'm going to show you where we're at with the CMI, and we're also going to look at inventory levels as well. And if you're new here, I am a subscriber to the Cromford report, which gives me all of this great information. They have this index that tells us essentially the heat of the market. So their market index is read this way. Anything over 110 is a seller's market, and anything under 90 is a buyer's market. So we're at 161.6 today. And I believe last Monday when I was on here, we were about 162. So this has gone down ever so slightly, but it did cool off a little bit. And what I've noticed quite a bit is this demand index, because this was at 80 only a couple weeks ago, and now we're at 78.8. So same goes with demand and supply. Any number below 90 and 100 is essentially balance. So we're low on our demand, and we're also low on our supply, obviously supply being lower than demand. But what's interesting is supply is still decreasing as well. And I've talked about this a bit in the past that there is something called the lock-in effect, where people are keeping their mortgages because they have such low interest rates and not wanting to sell their homes, which is locking up a lot of our resale inventory. And I'm going to do a video on that on Friday, so make sure you stay tuned for that. But this is kind of our situation. So we're seeing a lot more activity in the new home market than we are in the resale market because there's just not a whole lot going on with supply right now. So long story short with this, we're technically in a seller's market at 161.6 because we have low demand, but our supply is lower. And like I said, I've been watching this demand and this is starting to go down, likely because of rates, but also summer is a little bit slower. So maybe our activity is lower, but the CMI is seasonally adjusted. So we shouldn't be seeing, upticks just because of the season. So let's look at every city. They have this really awesome chart that gives every city and where they're at, or at least the major cities here in Phoenix, enough data for them to do this index for. And Chandler is still leading the pack. Now, if there is a green arrow, that means month over month, that city saw an improvement if you're a seller. If it's a red arrow, it means month over month, that city saw some deterioration if you're a seller. So all of these are from the mindset of the seller. You gained more ground in Chandler month over month by 9%, according to the CMI, right? That's not prices, that is this index. So Chandler is leading the pack. What's interesting about this is they will look at the month over month change on average for all of these cities. And last week, when I was mentioning the month over month change, it was negative for the second week in a row, and we saw a change of about 3.3%. This week, we're seeing another negative change, and it's even more. It's negative 5.3%. So month over month, when we're comparing the average change of all of these major cities, we've seen some acceleration in how these have deteriorated for sellers. So essentially the CMI is going down for on average for all of these major cities. Now we've seen some show positive increases. So the few that are positive, we have Chandler that rose 9%. Let's see. We also have Buckeye had a massive increase of 16%. But then you've got Tempe, 25% change, negative for sellers. And we've got Cave Creek. So some of these other cities, Avondale saw some big changes in the opposite direction. So we're kind of 50-50 here right now. But overall, when you look at the average, everything has deteriorated for sellers. And why is that? It's because demand is going down. We're seeing lower demand and we still have that low supply, but it's starting to increase a little bit. And that is where we need to keep our eye on right now, because if we do start to see inventory increase and this demand doesn't pick up, then we will start to see prices softening or prices falling, depending on the acceleration of that and how quickly that's changing. So let's look at our inventory or our months of supply. So months of supply means that if no new homes came on the market, so if we stopped everything that we are doing and sit the way that we're sitting right now, these homes would be, all the homes on the market would be purchased within 1 month, 2 months, whatever the reading is. So basically it's that absorption rate of how much demand there is out there that would take up all of the homes for sale. And so I have a few years on here. Let's start with 2020. So before things went a little crazy and the pandemic hit, and then we saw our supply just really go down. So this is down to 1 month of inventory, meaning if no new homes came on the market, every home for sale would be purchased within a month and there would be nothing left. So that's how, we had such strong demand. That was 2020. And then 2021, we just had no inventory pretty much the whole year, which is a big reason why we had, such high prices and that climb in 2021. Then we go to 2022, and in May, as interest rates started to increase, our demand fell, and we had all this inventory come out, and this looks really drastic. But then you see the peak is 3.8 months of inventory, much different than 1 month of inventory. However, in order to even get towards like a balanced market, we need to be at like 3.5 months of inventory, somewhere in there. So this really wasn't even that absurd, though it felt like it because we were coming from such a low state. Now let's look at 2023. We lost a lot of inventory. We were really getting busy in the spring, and demand was up, and it's kind of hung out, but now we're starting to see inventory tick up a little bit. Still very low in supply, 1.7 months, so extremely low, but we are seeing a trend upward over the last few weeks. And again, largely because rates are high. Rates went up into the sevens. But with what we're seeing now, rates came down the last couple weeks. I don't know if we're going to start to see more demand come out of the woodwork because of that. This week will be telling, depending on how all the economic news affects mortgage interest rates. But for now, I say, let's keep an eye on supply. No rhyming intended there, but we'll go with it. So Cromford report is saying that normally we'd need to see more than 4.5 months of supply before prices start a downward trend. And so where we're at today, 1.7 months of inventory. Just keep an eye on it. Let's see if it continues to go up. We didn't even really hit that 4.5 last year, but because of how quickly everything happened and there was so much panic, we did see prices start to fall, and our demand really kind of fell off a cliff last summer. So inventory is going to be something to keep an eye on. So anticipation, I am anticipating more news this week. We need to keep an eye on what's going on with inventory and supply, and what happens with our demand overall. So if any of this is helpful to you, please consider subscribing to my channel. I would appreciate it. I, again, am a real estate broker here in Phoenix with a team, the Desert Dreamers, and we'd be happy to help you if you're looking to buy, sell, invest. Feel free to reach out to us directly. The contact information is below. So if you got any questions about the market, let us know. We'd be happy to chat with you, and stay tuned for Friday's video where I'm going to talk more about that lock-in effect. Thanks for joining me today, you guys. I'm Caitlin McKegg with the Desert Dreamers.